Hi, welcome to the Math Update Training Series on Medicaid Basics. This video is going to be about long-term care Medicaid. So there are a few different long-term care Medicaid programs. The first is for nursing home Medicaid. Now, for nursing home Medicaid, if the person's single and they live in a nursing home, they have to meet the nursing home level of care, meaning there's a medical screen. They have to be medically eligible for nursing home care. There's an asset limit of $2,000, and the income limit is simply that their monthly net income is less than the cost of long-term care. So for nursing home care, what they do is they look at that monthly net countable income allowance, and they subtract a $60 patient allowance. That $60 is the patient's spending money for the month. And they can get whatever they want. They can get a really big piece of chocolate. They can get their hair done. They can get, new slippers. Whatever it is they want is that $60 spending money. And then they subtract the health insurance premiums that are paid. So that includes, their drug plan. Sometimes they have a supplemental policy. Any of those insurances. And then they subtract up to $60 for guardianship or conservatorship if somebody has a guardian or a conservator. And then what happens is the nursing home, home also can deduct certain items that are medically necessary that were not covered by Medicaid. But whatever is left over is the patient pay amount, and the patient pay amount goes to the nursing home. So, essentially that person's check will go to the nursing home, and they'll get $60 allowance. Now, things work a little bit different for married couples. Married couples have long-term care Medicaid for a married couple. They have certain income and resource allowances that protect the community spouse, so the spouse that does not need long-term care. So they protect some income and assets for the community spouse so that they can afford to keep a roof over their head. There's a MAP booklet that's available on mapinc.org. It's when your spouse is in a nursing home, and that's really good. It kind of lays out like the details of how long-term care Medicaid works. So if you want more information than this, there's a Medicaid specialist training in Lansing every year. It's usually in July of each year. So, stay tuned for that. You're welcome to get more information on this. The thing is that we get so very few calls about long-term care Medicaid, and we rarely help people apply for long-term care Medicaid. There's a whole training devoted to this topic. In a nutshell, that's kind of the qualifications to get long-term care Medicaid. The next long-term care Medicaid program is My Choice Waiver. It's also called Home and Community-Based Services. And what this program is it's a long-term care Medicaid program, but instead of getting long-term care in a nursing home, the patient would receive long-term care in their own home. The My Choice Waiver is administered through local waiver agents. So many of the area agencies on aging are waiver agents as well as other community partners. And the waiver agents, what they do is they help coordinate the care in the home. You know, the application is done through the waiver agent, and they work with the DHHS office on eligibility. Now, the asset test is the same as nursing home Medicaid. So, you know, the $2,000 for a single person, and then if there's a married couple, it's there's community spouse protection. The income test is different, though. For my choice waiver, the person who needs the services can have no more than $2,199 a month in 2016. There's no deductions, there's no patient pay amount. It's just that their income can be no more than that. Now, I want to stress this, though. If it's a married couple, they don't look at both incomes for both spouses. They only look at the income of the spouse who needs assistance. So the spouse who needs assistance can have no more than $2,199 a month. And if it's a single person, it's just the $2,199. Now, when talking about long-term care Medicaid programs, something that factors in is this idea of divestment. So divestment is transferring assets or income for less than fair market value for the purpose of qualifying for Medicaid or retaining Medicaid benefits. So that's what divestment is. And there's a 5-year look-back period that looks for all transfers. Now, when looking at divestment, it's just people aren't allowed to give away their money or their assets or their income for purposes of qualifying for Medicaid. And one of the things that comes up is, people say, well, the IRS says I can give away $10,000 a year, and that might be that's fine. The IRS, for tax purposes, has that rule that there's a certain amount of money you can give away without being taxed. But those rules are different than Medicaid's rules. Medicaid doesn't have that. For Medicaid purposes, if you transfer your assets within the 5-year look-back period, it's going to be considered a divestment. And so the divestment results in a penalty period in which Medicaid will not pay for long-term care services. And that includes nursing home care, my choice waiver services, home health services, and home health services. So what they'll do is they'll look at the amount that's divested and divide it by a certain divisor, and that will determine the number of months that they will be in a penalty period. In that penalty period, during that penalty period, the patient would have to pay for his or her own long-term care. So not all transfers are divestment. For example, transfers to a spouse for the benefit of the spouse is not a divestment. Transfers of excluded income is not divestment. Transfers to a blind or disabled child for the benefit of that child. And there's some other rules about divestment. They all can be found in BEM 405 if you have any issues that you want to look at. Now, divestment does not affect payment for any other Medicaid category or service. So, if somebody wants to qualify for community Medicaid or Medicare savings programs, they don't look at divestment for those programs, but they do look at it for the long-term care programs, like the My Choice and nursing home care. But if somebody needs long-term care Medicaid in the future, even if they're only applying for community Medicaid now, it could become a sticky situation. Now, one of the questions we're asked is if somebody applies for Medicaid, can they take their home? And that idea is called estate recovery. Rules on estate recovery can be found in BEM 400. And so for community Medicaid, no, but for long-term care Medicaid, maybe. So estate recovery started in Michigan on July 1st, 2011, and it's actually a federal requirement that we have this in place. Its purpose is to recoup certain expenses paid on behalf of Medicaid recipients from their estate. And this only affects persons over the age of 55 that receive Medicaid to pay for nursing home care, My Choice waiver services, home health services, home help services, hospital services, and prescription drug services. Estate recovery does not affect anyone receiving Medicare Savings Program payments in most community Medicaid, again, except for the hospitalization. No estate recovery will occur until after the death of the surviving spouse, or as long as the recipient has a surviving child who is a minor, blind, or disabled. So it would be, after the beneficiary passes away, but after the surviving spouse or certain children. And estate recovery only looks at the state will only look at those assets that pass through probate court after the recipient's death. So many assets do not pass through the probate court, payable on death accounts, joint accounts and property, some trusts. So there's a lot more information on michigan.gov/estate recovery. But the bottom line on estate recovery is yes, there's a provision in place, but there's lots of protections for the spouse and disabled or minor children. There's many situations in which estate recovery would not come to pass. So there's more rules on the estate recovery website. So that's long-term care Medicaid in a nutshell. There's definitely a lot more information on this topic. And again, if you're really interested in the topic and want to find out more about the nitty-gritty, there's a whole Medicaid specialist training that occurs every year, and it's a whole day of long-term care Medicaid. In the meantime, if you have any questions, please contact your site coordinator or myself, and be sure to let your site coordinator know that you've viewed this webinar. Thanks so much.